Guten Morgen, liebe Bachheimer-Leser aus der Redaktion. Ich habe heute einen ganz speziellen Gast hier. Aus Australien ist mir zugeschaltet der Gründer und Weltpräsident des Goldstandard Instituts Philip Barton. Philip Barton ist aber nicht nur ein Gründer und quasi Chef von mir, sondern auch ein wichtiger Mentor und ein guter Freund. Und wir haben uns jetzt leider länger nicht gesehen und machen jetzt halt über Skype jetzt einmal einen kleinen Ausflug in die Goldwelt, damit ihr mal die Gedankenwelt unseres Chefs in Australien kennenlernt. Und ich wünsche euch dabei einen möglichst hohen Erkenntnisgewinn und viel Spaß. Philip, thank you for being with us, taking your time and sharing your thoughts with us. Thank you very much, Philip.
It's a great pleasure to be with you, Thomas, and your viewers. Thank you for having me.
Thank you. Philip, let's just begin with the gold price, which is, of course, unnerving now for our readers who are all gold bugs. And what's your suggestion why we are in a secular bull market, I would still say, but why did we go down for more than half a year now? What's your suggestion on it?
You've got to look at it from the right way round. We, all of us, myself included, look at the dollar price of gold and talk about the dollar price of gold and think about the dollar price of gold. And the central bankers love that when we measure gold with dollars. They just love it. The truth is, unless you realize that gold is the measure and what you're looking at, it's the value of the dollar you're looking at. It's the value of the dollar that's going up right now and has been going up for a while. And it's the traditional flight. There are a number of factors. It's a flight to safety. People, and don't laugh, but people say flight to safety, go to the US dollar. It's ridiculous, but that's the world view. The US dollar is still the premier currency. It's the international reserve currency, and it will be the last one to fall, not the first. So it is the one to judge all other currencies by. The US dollar is going up because the US economy is still held in great respect, because people want dollars, and over and above everything else, every debt in the world just about is denominated in US dollars, which creates a huge demand for dollars to pay off that debt. And so as the debt gets bigger and bigger, it's ironic, but the demand for US dollars will get stronger and stronger. And as the US dollar goes up, so the dollar price of gold goes down. Of course, we know that the value of gold is actually stable, and it's the dollar that's going up and down. It's not gold moving. But so what's going on? The debt's going on. There are debts. People have to pay off their debts. Never have the debts been more of a problem than they are right now, and the problem's getting worse. But at some point, dollars will start flooding towards gold, and then it will take off, and your audience, your gold bug audience, will be delighted.
Okay.
And, well, it's not just gold, of course, silver as well, very much so.
So, and you mentioned the US dollar as a reason, and the US dollar is, of course, driven by interest rates. And as we see, the interest rates turned in the first week of August, the US interest rates, to go upwards. Is this also, in your opinion, that the interest rate is the correlation of -1 to the gold price, the US interest rates?
I don't know. All I know is that the interest rates won't go up. They'll do anything to keep the interest rates down because they cannot pay the debt if the interest rates start going up. They can't pay the debt anyway, or they're not paying the debt. They can't service the debt. If the interest rates go up, the debt problem will become catastrophic overnight. They cannot go up, so they won't go up. They won't go up until the whole thing implodes. I know the long end is going up, but it'll come down.
Yeah,
they have a lot of tricks to play, the central banks, and they will pull every rabbit out of the hat to keep the interest rates down. And yeah, there have been a few quiet bonds auctions where they had to, where the, it went up a little bit, the interest rate, but it won't last. They're still queuing up essentially to buy bonds at ridiculously low interest rates. They don't really have a problem just yet, and it's all speculation suggesting that we're going to have really high interest rates and inflation's on the way, and I don't see it.
Yeah, that meets my expectations, because what you can see is on this 30-year bond that the yield always stays below the 100 months moving average line.
Yep.
1991. And now we are narrowing to this line. And so I would expect that within of March, the interest rates would turn down again.
Yep.
Is this going in line with your opinion or your expectations?
It is. You have a better technical knowledge of that than I do, Thomas. But yes, that is in line with my expectations. I do not believe it's going to go up. It can't go up. The whole game is over with fiat currency when it starts to rise, so it won't. Not until it cannot be held down any longer, and that time is not now.
And there's one more point concerning the gold price, which is concerning me. We both are persons who are not in favor to, are not favoring a measurement of the gold price in fiat currency. We know the reasons, our readers know the reasons for that, but we are measuring in other commodities. And if we remember to the last all-time high price in September 2011 of gold, the gold was massively distracted, but the other commodities were distracted more. So the purchasing power in the gold base was increasing. Now, between last August, last all-time high, and now, the purchasing power of gold in oil, in silver, in some agri commodities is decreasing. Is this just for half a year? It's not very important, but could this be problematic for the purchasing power of gold, or is this just a short episode in history?
The value of goods changes all the time, Thomas, all the time. And nothing's changing with gold, but the value of goods, yeah, it's very subjective. It goes up and down all the time. Oil, silver, they both could be considered to be have been extremely undervalued recently. You know, we're talking about moving over to wind farms and moving over to solar, and it's all nonsense. They'll try to do that, but oil is going to be with us for a long, long time. Yeah. And there's been no investment in oil for ages. It became in fact, many companies actually passed board rules that they weren't allowed to invest in such firms anymore. And so capital was withdrawn. The oil companies themselves scaled back operations, scaled back exploration. And all of a sudden, there's quite a bit of money going into those things. And so the price is starting to rise again. So they're getting more expensive. So gold isn't buying as much of it. It's the value of the good that's changing, not the value of gold. And silver, yeah, I would agree with probably most of your viewers. I think that silver is pretty undervalued right now. So I see a good reason why gold isn't buying as much silver as it used to.
But silver caught up in the last half year. We have a gold-silver ratio on some weeks of 120 and more, and now we are on between 60 and 70. Do you think that the purchasing power of silver compared to gold will rise? Or in other form, do you think that the gold-silver ratio will go further down?
This is just a guess. This is really just a guess. None of us know in such chaotic times, and I can't give a firm prediction. My gut feel is yes, the ratio will drop from here. And I believe there is such a lot of interest in silver, and I believe that I remember Dr. Keith Weiner about a year ago made a point, and I thought and I filed it away as being an extremely interesting point. He said, when the big hedge funds, the big money boys, go into the monetary metals, they buy gold. You know, you can put a lot of value into a little box like that and put it into a safe deposit box or leave it with the Delaware Depository or whatever. Mm-hmm. So don't buy silver. He said he believes that could change this time. The potential gains in silver are so huge that he does see the big money going into silver as well as gold this time. If that's so, and I thought it was a very interesting speculative thought, and I thought that's probably true, and I thought his reasoning was very sound. If it is sound, and if he's right, then the gold-silver ratio is going to really, really come down big time. And if you get a few $1 billion moving into silver overnight, that will change things.
So we both hate to make predictions, but we both, am I right if I say we both think that 2021 will see higher gold and silver prices than we are experiencing them now in the middle of March, on the eve of March?
I do believe that, yes. I am reluctant to make predictions about price. It's so easy to make a damn fool of yourself. And as I've already mentioned, these are chaotic times. To try and predict in times of chaos, you're setting yourself up for a big fall. But I'll stick my neck out and say, certainly I do agree with you. It'll go up this year. So will silver in dollar terms. I believe by the end of next year, you're really going to have seen a very big move in gold, a very big move indeed. And that is not, I'm not talking about a collapse of the dollar. I do believe that in dollar terms, even with the dollar at its current strength, gold is not valuing dollars properly. I believe that the price, if I can stick my neck out, and I know you want me to, don't chop it off. I believe that the gold price will be somewhere around $7,000 by the end of 2022.
Jesus.
And, that's without any catastrophic collapse in the dollar or anything like that, just a proper adjustment. And I'll tell you what I based it on. And unfortunately, I looked this afternoon trying to find my original figures. Many years ago, I looked at house prices in the middle of the 19th century. It was around 1850 or 1860 in both the UK and the US. And based on an average house price, and it was about the same price, about 500 ounces of silver, for a 3-bedroom suburban house, pretty ordinary place, but a nice house, you know, not a palace and not a hovel, but an average suburban home, 3 bedrooms, 500 ounces of silver, bearing in mind the price of the gold-silver ratio, bearing in mind the price now. And I allowed for a correction in the price now because it's in a great bubble in many parts of the world. Mm-hmm. And I sort of figured it all out that recently I rejigged those figures. I couldn't find my original figures, but as much as I could drag out of my memory, I rejigged them and came up with that figure that gold should be around $7,000 US dollars an ounce. For what it's worth, it's a guess though. What happened in 1850 really has got nothing to do with what's happening in 2021, but it's something to base it on.
Okay. Speaking about US dollar, we had between 2011-12 and between 2016 here in Europe, a lot of discussions by politicians about the cash ban. Mm. And the last couple of years it was quiet about this. The topic disappeared somehow and came up with the Corona crisis again. So yep. Could you give us your thoughts on a cash ban? Is it possible that they are doing a cash ban right now? Why didn't they do it? We all know the reasons why they need a cash ban. What's your thoughts about it, please?
I have a few thoughts on it, Thomas. And the first one is that it's not practical. We are going into I believe, a severe depression. We're on the cusp of it now. We're at the entry point of it now. Times are going to get worse and worse. Many people are going to lose their credit rating. They're going to lose, in other words, their credit cards. They're going to be cut up in half, or they're not going to be issued with one when they apply for one. Less and less people are going to be able to access credit, which means they're going to be reliant on cash. The further things move along now, the less practical it will be to ban cash. Some people will end up with no way of transacting if cash is banned. The other factor is, as we know, it's being done because they want to gouge more tax out of the economy, and they know that some people are evading tax by using cash. What it will do, I believe, and I strongly believe this, is that if you stop me transacting in cash by taking away dollars, well, I'll transact in cash by using silver. I would rather do that than pay tax. If I'm intent upon avoiding tax, if I'm not allowed to use dollar fiat cash, well, I'll use monetary metals cash. And so nothing will bring silver out of its hoards faster. It won't bring gold out. Gold isn't used for daily transactions. But there's a lot of silver sitting in hoards waiting to come out, which would come out. And I know business owners would, a lot of them deal in cash as well and would welcome it. A lot of the people paying would, you know, if I could get rid of, if I were looking to avoid tax, I would happily, you know, I use dollars then because there's no trace. But if I can't use dollars, well, I might be prepared to use my silver. In fact, I would be. I'd rather use my silver than pay tax. If that's your mind frame, you'd rather use silver than pay the tax. The only problem with that, this is a third thought, is that the smallest denomination that I've seen in silver anyway are 1 ounce coins. They're too big. The silver guys need to start making some smaller units. 1 ounce of silver is going to be worth a lot of money. You've got gold at $7,000 an ounce and a ratio down to 40 maybe. That ounce of silver is worth you're not going to be a loaf of bread with it. Yeah. We need denominations. We need, you know, some 5 grams of silver, that sort of thing.
Yeah, I know from the mint, from the British mint, that they are producing a 1/4 ounce silver coin right now. Britannia. Maybe they are doing this because of these thoughts. Maybe they are sharing your thoughts, or they read some articles from you.
And look, you know, I think that it doesn't take a genius to work out it's going to bring silver out of its hoards. And I'm quite sure these guys who work in the banks have worked that out as well. And that's why I don't think it'll happen. But I think what I was in the middle of saying was that I don't think that they're going to ban cash, because what I've said about it drawing silver out of hoards, and what I've said about the lack of credit worthiness of a lot of people is obvious to the banks as well. They will have thought of this as well. And I think it's gone quiet because the idea is not sound. The idea was floated. They put it out there. They've heard opinions from here, there, and everywhere. They've thought about it. And I suspect they've discarded it as being impractical.
Okay. But there are more than rumors out that there is the central bank digital currencies on their way.
Yeah.
So why are they planning this when they don't want to, when they are not able to do a cash ban? What's your opinion on that?
I think, okay, it's probably not too smart to ask a 75-year-old about e-currencies and bitcoins and things like that. But being an arrogant old man, I do, of course, have an opinion on everything. And
it's the reason why we called you today.
I suspect that the e-currency talk was hand in hand with the cash ban. You get rid of the cash, you bring in an e-currency, and somehow that was going to be put into the economy as the cash was pulled out. It was going to be a substitute for the cash. And I don't think it's going to happen, because I don't think the cash ban is going to happen.
So why the efforts then for this?
Why what?
The efforts of the central banks. Any central bank is trying to get a kind of a e-currency. We know from Sweden, for example, they had a test run for 1 year. And this morning they admitted there are too many disadvantages compared to the fiat money system. So the Swedish, like in their Corona policy, they are dropping out. And it's only a question of time when Brussels will declare war against Stockholm.
Thomas, what did the Swedish central bank say what the problems were? I
only had this headline that the economy, the e-money is inferior to cash. And the reasons I will put into our video then the complete article. I didn't read it because it's morning in Austria, late evening in Australia. I couldn't read it because I had to talk to, or I wanted to talk to you. So
it took them 12 months to work that out.
Yeah. But that's funny, and I think that's the first hole in the wall of the central bank digital currencies, and I think it's good news, and that's very nice coincidence that we are talking today and 1 hour before the Swedish central bank comes out with this news. But my original question is, why were they still trying to do it despite the fact they knew it couldn't work out? We don't know.
I'm afraid I don't know, and I won't pretend to have any knowledge that I don't have, or an expertise that I don't have. I don't have anything intelligent to say to that, Thomas, I'm afraid.
No, it's not. It was just asking. But let's get now to a point where we both are experts, I would suggest. To the Goldstandard Institute, you founded it 13 years ago.
Yes.
And I would like to repeat, I know it, but with your words, what was the main purpose of the Goldstandard Institute?
The main purpose of the Institute was very simple. It was to inspire a bottom-down awareness and building enthusiasm for the reinstatement of gold as money and silver. But because it's never going to be granted to us by governments. They will never give up their right, as they see it, to churn money out on a printing press, to create credit ad infinitum. They will never give up that. It will have to be demanded by the people. And the idea was to educate sufficient people so that we had a groundswell of support. It would involve a lot of lobbying of politicians and of influential people here and there. And to be frank with you, I can't say it was terribly successful. We had some success. It was successful, but not fast enough and not to the degree that we needed. And so we changed direction. And we moved the focus to the US. The focus was very much in Europe for a while, and obviously we still have interest in Europe, and we still are focused in Europe. But our primary focus changed to the US, and Dr. Keith Weiner was appointed the president of the US Goldstandard Institute, and he has begun a company called Monetary Metals over there. So we have really a two-pronged thing at the moment. We have the Institute and yourself in Europe, and that's at this stage, a more academic approach, still on the original, which is valid, still on the original purpose of educating and disseminating. And we have the American company, the American Institute, and Monetary Metals, which is a commercial operation, which is simply, it has the purpose, and it's succeeding in bringing gold and silver out of its hoards and paying interest on that gold and silver. And it's been terrifically successful. And credit for that goes to Dr. Keith Weiner. And he's taken an idea which few understood even 6 years ago when it began, and turned it into a viable business, and a business with a graph that's going like that. It's very, very impressive. If any of your readers want to actually, your viewers, I'm sorry, want to go there, it's monetary-metals.com. Monetary-metals.
We are linking to Keys's homepage once a week. So our readers have the links and everything, but thank you for mentioning it. But we are, I hope those who are capable to understand sophisticated English are reading it. And we send to Keys quite a lot of viewers.
It is very sophisticated, his English. It's hard for English speakers to understand some of it, unfortunately.
I have to admit, sometimes I have to take the Google Translator or DeepL to get translated, because reading as a non-native speaker, Keys's essays is, even for people who have a bit of understanding of the monetary system, very, very complicated. And sometimes we are translating the whole essays from Keys for our readers.
Yeah, no, that's great, because he has a lot to say. He's a unique thinker, and his knowledge of economics is excellent, and his knowledge of what he's doing with monetary metals is fantastic. And the point is, with gold and silver at the moment, is it is all, or most of it is in hoards. You know, I'm quite sure your viewers have their stashes of gold and silver in the wherever, hidden in the bathroom, hidden under the mattress, buried in the garden, probably, in all these places, and nothing will get that gold and excuse me, nothing will get that gold and silver out except interest. And monetary metals is bringing that gold and silver out and paying interest on it in gold. Excuse me while I have a quick drink.
Yeah, sure. I'm doing it all the time. So.
And so we've just done our first gold bond deal with a miner in Australia. And, you know, at the same time as the dollar banks are paying, I rang around a week or two ago. I was looking to find out what just as research, I wasn't interested in putting money in the bank, but I wanted to know what they were paying for savings account. And the highest interest rate I could find for a savings account with one of the major banks was 0.045%. 0.045%. Now, why would you risk your money in a bank, which is so dangerous at the moment? Why would you do that, knowing that you're only going to get 0.045% when the dollar is going to start its fall again soon, when you can invest in gold and get your interest paid in gold? And the bond that they've just done in Western Australia is paying 13%, 13% interest. 13%.
I did not know that.
Yes, 13%. And that's a big difference. Dollars in a bank or a gold bond paying 13%. It's a no-brainer. And the other thing is that what monetary metals is doing is going to be replicated by others. Other people are going to see this. It's going to take a while. It won't happen quickly. But Philip, my guess within 12 months.
Sorry to interrupt you. Philip, could you turn the camera a little bit upwards?
Oh, yes.
Your face is cut in half.
Is that better? So
now we have you in your whole beauty.
I wouldn't want your viewers deprived of that.
So sorry to interrupt you. We were at the 13%, and I had a question there. Is the yield of the gold bond sensitive to the gold price?
No, not at all. The whole idea of these miners borrowing in gold, what they do is we raise the gold, we lend them the gold that they want. I think in this instance, I think it's 7,500 ounces. And now they take that 7,500 ounces of gold, and of course they immediately put it into dollars, and they buy the trucks they need, and they hire the labor they need, and they build the site offices and the mill, and they buy all those things that they need to get their mine producing gold. And why the beauty of gold? Because if the dollar price of gold suddenly drops, back in the 70s, if I could jump back a bit, back in the 70s, when my interest in gold first arose, some of the gold miners went broke, because in the middle of that rush, and I think it was around 77, I wouldn't swear to that, but it was between 75 and 81 was the rush. And around 77, the gold price had gone from your side, gone like that, up, all the way up to 600. And then it crashed to 300. And then it went to 850. But the graph was like this. It was a savage correction. What happened? A lot of miners went broke then because they'd borrowed in dollars.
Yeah.
They went to the bank and they said, this is our asset. We've got 100 million in the ground in gold. That's our asset. We want to borrow 50 million against it, whatever. And then the price of gold went down by a half, and all of a sudden their asset value was only 50 million. And the bank said, we need more money from you, or we want our loan back, and they went broke. So when they borrow in gold, it doesn't matter what happens to the dollar price of the gold. They borrowed 7,500 ounces of gold. If the gold price goes to $10, it doesn't make any difference. They still only owe 7,500 ounces of gold. So when they start producing, they give the 7,500 ounces of gold back, and they're isolated. They're immune to that dollar variation, that dollar volatility. So the miners are really, really keen to do this. It makes total sense to them, and they understand it. It's simple. They can understand it. So it's got a great future. There are other companies that are going to replicate this, and I believe it's going to be the growth industry of the future. I honestly believe that monetary metals is going to be like the Standard Oil at the turn of the 20th century. It's just going to be a massive business.
May I have another question? I've been 20 years in the investment scene, and I'm asking myself, on an interest rate of 0.5 in Australia on my savings account, why do I offer 13%? Why don't I offer 7%?
You know, an interest rate, that's a very good question. But of course, the answer is interest rates should be governed by risk. What is the risk? If the risk is big, well,
yeah.
And the thing with the gold mine, the risk actually, I had a look at the original paperwork on that, and it looks like a really good deal. And the people putting in their money are some very big, well-known, experienced gold boys in Western Australia. It looks very good indeed. However, it's the first gold bond. It's unknown. Now, we know, we're very, I know Keith is very confident of this and very confident of the mine. He's got a lot of his own gold invested in this. And but there is a perception of risk. But my own perception is there's far less risk in putting money into that, putting gold into that, than there is in putting some money into an Australian bank.
For sure. But if I see 13%, and we both know the higher the risk, the higher the yield,
Yes.
In opposite to the central bank behaving.
Yes.
But if somebody offers me 13%, I would, not me, because I'm in gold, of course, fully hearted, but somebody who is not that deep into gold could get some awareness or some.
And that would be sensible as well. You're right. I don't think it's actually going to draw in a lot of new people until the interest rate comes down a bit.
Yeah.
I agree with you. I think 30% actually scares people. It doesn't have people go, yes, take my gold. It actually, 13%.
Yeah.
So I totally understand, but your logic is sound with that.
Okay. 13% sounds really big for gold,
Yeah.
Yeah.
And bear in mind that they're actually paying 16%. 3% goes straight to monetary metals.
Mm-hmm. Okay. Yeah, of course.
But what they do by doing that is they remove all that risk. The gold company removes all that risk. They have no dollar risk anymore. They're not exposed to the volatility of the dollar.
Mm-hmm. Mm-hmm.
They make gold, they produce gold, and they've borrowed in gold. In business, you've always got to do that. If you earn euros, you should be borrowing in euros. You don't want to be borrowing US dollars to try and produce European euros. You can get caught in a terrible currency problem there.
Mm-hmm. Mm-hmm.
And the same applies to gold.
So this was by far the biggest success of the Goldstandard Institute.
Yes, it was.
Besides, we have to mention that Keith did some state hearings in Nevada and Utah about gold bonds issued by the state.
Yes.
Could you tell us a bit of this?
A little bit of it, yes. The idea of gold bonds is that you have a normal bond auction, and at that auction you have gold bonds. You're selling gold bonds that pay interest in gold, and they can only be bidded for in dollar bonds. You cannot bid for them in dollars, and you can't bid for them in gold either. You have to waive your dollar bonds, and the idea is to draw in those dollar bonds that are killing our societies. In Europe as well, not just America. There are so many dollar bonds, the debt is denominated in bonds. And if, for example, I hope I'm getting this right, if Utah puts out a gold bond and people bid with their dollar bonds for those gold bonds, the dollar bonds come in and can be retired, the gold bonds are out there, and they can be serviced. Utah produces, I think it is 140 tons of gold a year. Now, I don't know what the taxation rate is in Utah, but I'm sure it wouldn't be any less than 10%. At only 10%, that's 14 tons a year of gold that the Utah government would be getting. That's an awful lot of bonds they can extinguish. So as those bonds become due, they can actually pay them out. So you've gone from having all this great pile of dollar bonds to a pile of gold bonds that can be extinguished by the government. So the debt can actually be paid off. It can never be paid off while they're dollar bonds.
Good that you mentioned that Utah is a gold producer and not too small. Is this gold bond also capable for countries or states who are not gold producers, in your opinion?
Yes, because gold is money. It's not just countries that have gold mines that will benefit from a gold standard. You know, you might have a country with a gold mine, and you might have a country with a great productive capacity. The gold mine will run out of gold one day. It's not good enough. But the country with productive capacity is earning gold. That's the country that's going to do well. The country that's got, like South Africa still has probably some of the largest gold deposits in the world. That's a guess. I haven't actually looked for a long time. But it doesn't mean to say that South Africa is ever going to be a huge major economy just because they've got big gold mines. You've got to have that production. If you're earning gold is what matters. If you're creating wealth, and you're going to be pulling in gold, and you'll have a gold income, and you're looking good. If you've got a gold mine and that's all you're doing, digging gold out of the ground like Australia, one day your gold mines are going to be empty and you're going to be broke.
Okay. Philip, one last question. We were talking about the Goldstandard Institute, and you founded it in 2008, and I was joining you, I think, 2010-11. One last question. Did you, in 2008, think or reckon that the euro and US dollar will 2021 still be in charge as monetary system?
No, I didn't. I can answer you that very honestly and very quickly. No, I didn't. I had no idea that they would keep going this long.
Me neither.
I just, you have to take your hat off to these central bankers. They really can drag it out, but they've dragged it out to the point now where when it does collapse, it's going to be a terrible, terrible catastrophe. If they had confronted the problem back there in 2010, 2011, we wouldn't be having this conversation, and I wouldn't be being so gloomy right now. Because they've, you know, we all know this saying, they've kicked the can down the road, and they've kicked it and kicked it and kicked it and kicked it. And whenever that road comes to an end, it's going to be very, very unpleasant for a lot of people. All those people who are linear thinkers, they believe that what was yesterday and what is today will be the same as what it is tomorrow. and it won't be. Tomorrow is going to be a very, very different world. And while I don't see inflation, I just jumping back to something we discussed a little while ago, while I don't see price inflation, I do see inflation in food prices. I really do. There are some major food problems going on in the world at the moment. America's in a huge drought, apparently. Australia's food production has gone down. We had a big drought as well. We had bushfires. A lot of stuff was burnt. And there are quite a few problems with food in the world. And food shortages, food that people can't afford leads to social problems, big social problems.
But the food prices are at the moment not caused by monetary growth, money supply growth. They are caused by natural reasons, catastrophes, shortages.
That doesn't change the effect.
That doesn't change the effect, but it's not the classical inflation caused by inflating. You know what I mean? So now we are, and then we will change, because then if the people see, in my opinion, the food prices going up, then they trust more into food than into the euro.
Yes.
And then we will get the classical inflation, in my opinion. Am I right?
Yes, yes. Absolutely, yes. And and it almost reversed that. When energy prices are going to go up, there's been an underinvestment in energy prices, and when fuel goes up, when energy costs go up, everything goes up. But again, that's not a monetary cause. It doesn't really matter. But certainly food will go up. The cost of transporting food and growing food and processing food is all influenced by energy. Everything is energy costs. So we could well have a lot of price rises, but it won't have a monetary cause.
Okay. And then one last thing, monetary cause and price rising. We in Europe, in Austria and in Germany, we have, due to the lockdowns, we have the ratio of savings doubled.
So savings to what?
Saving accounts. The ratio of savings in Europe doubled. And once the people are free again, there will be a lot of money competing for less of products.
Yeah. Yes.
I don't know about Australia, how the saving accounts developed the last year, but I think this is a big challenge to keep the inflation down. It won't held down, because if this money, together with higher food prices, together with higher energy prices, then the hell will break loose. Don't you think so?
I do, and I'm genuinely concerned about the future, and I'm genuinely concerned that people aren't not only financially and monetarily ready for it, they're not psychologically ready for it either.
Yeah.
It's going to be a terrible shock to a lot of people. You know, the silly woke book-burning Nazis in America, these silly kids, they're not ready for it. How are they going to cope with this? They've been brought up in an age of ease and affluence and prosperity, and mummy and daddy paid for this and looked after them and their children. They're 25, 35 years old and they're little children still.
Yeah.
It's devastating to them. They've got a big shock coming, that generation, particularly in America. All those woke book burners who voted so enthusiastically for Joe Biden, they could well be scripted into one of his wars, and that'll cause an adjustment in their reality.
Okay. I think these are the perfect final words to close an interview in spring 2021. Philip, thank you very much for being with us and sharing your thoughts. And I put you in charge, or I ask you, maybe we can do this in 2 months' time again.
I would love to do
developments within the next 60, 80 days, and then we meet again via Skype and you share your thoughts again with our audience, please.
I would love to, Thomas. It would be a great pleasure. Thank you.
So thank you very much. Das war Philip Barton, Gründer und Weltpräsident des Goldstandard Institutes und außerdem noch ein sehr lieber und guter und mir ans Herz gewachsener Freund. Wir danken ihm sehr herzlich. Ich danke für eure Aufmerksamkeit. Bis zum nächsten Mal, euer Thomas Bachheimer.